Okay, we have in this exercise we have answered prepared answers for right relevant double entries. Right, we have seen that. Now we will see the second one, requirement number 2. Right, record in ledgers and balance it. Right, so we had to open up the ledgers. First of all, we have to open the T account. Here we first at the beginning level we have to open T accounts for you all to understand the accounting rules and passing double and single double entries. Okay, so first of all, first entry we will open what we called trial balance. Okay, this is the trial balance. Trial balance. Okay, this one is the folio number. Okay, account headings. Debit and credit. Okay, and credit. Okay, here we will say ledger folio number. Ledger folio number. Okay, here description. Description. Here this one is debit. This one is the credit. Okay. Okay, here trial balance is there. We have provide the trial balance. Now we will start with the T accounts. For the first T account, we have to open a cash account. First, open a cash account. Cash transactions will be the much. Sorry. This one is here you say debit and credit. Okay, this is the cash account. Let's see how we can manage the space. Managing the space is bit tough task. Okay, here 1st of March we says Ranjan commenced business with following investments. One is furniture, machinery and cash. Cash account we have opened, furniture and machinery we have to open. Here we will say machinery account. Okay, space is not enough, man. It's the problem. Here we will start with the furniture. Okay, furniture. This is debit, this is credit, this is furniture. Furniture account. Okay, next one is machinery account. This is machinery account. Debit and credit. Machinery. Machinery account. Okay, so what this first adjustment says, and this one is the capital account. Okay, and say this is the capital. Here we can say capital. DR and CR. Okay, so all three accounts available, 4 accounts we have created. 1st of March, this is Ranjan commenced the business with the following investment, that is furniture 600,000. Is bringing 600,000 worth of furniture. We said earlier, just go through the double entry. Furniture account debit 600,000, right? Capital account credit 600,000. 600,000. Okay. That is, here you will say furniture. Furniture. Here you will say capital. Okay. Second, machinery. Machinery he is bringing 550,000. That is also debited. I will say in thousands. Okay. It is in thousands. I am putting here in thousands. Okay. In thousands. So space, utilization of space will be less. Right. This is 600,000. Right. Capital 600,000. Here you will say Furniture 600,000. Furniture. Here you would say 550,000. Capital. Here you say 550,000. Machinery. Okay. And cash debitor 400,000. Capital. Okay. Machinery, capital. Cash 400,000. All are in thousands. Okay. Next one. Second, this is 100,000 worth of equipment was purchased. Equipment account. We will open a equipment account. This is debit. This is the credit equipment. Equipment. So equipment account, you are purchasing 100,000 worth of equipment. So you are crediting the cash 100,000 and debiting to the furniture. So why you are doing that? Because 100,000 of worth of equipment is coming into the organization entity, and we are paying 100,000 worth of cash going out of entity. Okay, so we are crediting the cash 100,000, right, and debiting the equipment account 100,000. Okay, so here the reference will be cash, and here reference will be equipment. Okay, so that double entry is correct. It is complete. Thereafter, on 3rd of March, you are purchasing 75,000 worth of inventory was purchased on cash basis. Why? Because if you want to do the trading, you had to purchase the inventory. Okay, so open up a inventory account. Okay, inventory account. Open up an inventory account. Inventory. So this will have a little bit nasty things. This is inventory. Account. Okay, inventory account. So you are purchasing 75,000 worth of inventory. Inventory is an asset, it is increasing, therefore you are debiting inventory with 75,000. Okay, all are in thousands. Okay, and you are paying the cash. You are paying the cash for that, so you are crediting it by 75. Okay, inventory. Okay, inventory. That is purchase of inventory. We have purchased inventory for 75,000. It happened on 3rd. Okay, this is on third. This is on third. Purchasing of equipment on second, right? Second. Okay, where's the inventory equipment purchased? This is on second. Okay, these are on first. These are on first. This is on first. Okay, so capital, this is also first. This is also first. Okay, this is also first. Thereafter, on 4th of March, we are the 55,000 worth of inventory was purchased on credit. We are purchasing on credit. Open up creditors, trade creditors. Okay, trade creditors account. Here's DR, here's CR, here is trade debtors, creditors. Trade creditors. That is on 4th, right? So here we can mark it. Here, this one we have seen. For this we have first entry. On third also we have first entry 55,000. That is the one we are just now going on. 55,000 worth of inventory was purchased on credit. So here cash factor not involved in this particular transaction. Cash factor not involved. It is purely the giving and taking place. The 55,000 worth of inventory are coming in inventory account debited with 55,000. It is on 4th, right? And credited to trade creditors. Credited to trade creditors, right? Why? We have purchased inventories on credit, not on the cash. Here cash element not involved. Okay, so here you will say 55 is the trade creditors. Here you will say trade creditors. Here you will say inventory. Okay, here trade creditors, here you will say inventory. So we have passed double entry for 55,000 in the set of ledgers. Now we move on to 5th of March. Sales on credit for 30,000. Sales account. Shall we have a sales account? Shall we open a sales account here? Okay, here is the sales. Sales. Here is debit. Here is credit. Okay. So what the fifth transaction says is sales on credit basis. Sales is the revenue. When sales take place, it has to be credited. 30,000. Okay, 30,000. Okay, and the connected other account is trade debtors. Trade debtors. Here DR and CR. Here you say trade debtors. trade debtors. Okay. When you make credit sales, pure there is no cash involvement. So cash sales is the revenue. Sales is increasing, revenue is increasing. If revenue is increasing, it has to be credited. We have credited here, and other connected account is debtors, because we have to receive money for the goods we have supplied to our customer. So he is called debtor, trade debtor. For trade debtor, we have to receive, that has to be debited. So the reference will be, here you will say on 5th of March, trade debtors. Here you will say 5th of March, sales 30. Okay, and thereafter it is completed 5th. Next, on 6th of March, sales on cash basis. We have made a sales on cash basis. So sales is the revenue is increasing. If the revenue is increasing, it has to be credited. So we are crediting the 25,000. Okay, where for the sales we are receiving the cash, so debiting to cash book. Okay, here we will say on 6th. Okay, on 6th. Here you will say cash, here you will say sales. Okay, so double entry for transaction which took place on 6th of March is complete. Okay, now we move to 7th of March. 7th of March, the transaction took place, paid 6,500 to trade creditors. We have made a payment to trade creditors 6,000. Okay, understood? 6,500, sorry. Paid 6,500 to trade creditors. So cash account is going out. We are paying 6,000. Okay. The trade creditors account debited 6,000. This is on 7th. This is happened on 7th. Okay. Trade creditors are decreasing because we are paying, so they are decreasing, means liabilities decreasing. When liability is decreasing, we have to debit it to trade creditors. We have debited. To settle the trade creditors, we have paid out money. Money is, cash is reducing, decreasing cash. So assets also decreasing. So cash account has to be credited. So here you will say cash. Here you will say trade creditors. Trade to. Okay, 6. 7th. Sorry, 7th. That is on 7th. 8th. Received 8,500 from debtors. We have received 8,500, 8.5 from debtors. Say trade debtors. In trade debtors are credited with 8.5. Here you will say cash. Cash. Because we have received cash from debtors. Debtors are decreasing, means assets are decreasing. Then we have to pass a credit entry for debtors. We have passed the credit entry, and cash is increasing. We are receiving the cash, so from debtors, then cash is increasing, then cash balance increases, assets increases, then cash account is debited. Okay. On 9th of March, Ranjan took 5,000 worth of inventory for his personal use. He has taken 5,000 for his personal use. You say drawings. We can open an account called drawings. His debit CR drawings. What has taken place in the inventory? Ranjan took 5,000 worth of inventory for his personal use. Inventory account has to be credited with 5 and drawings account should be debited with 5. Okay, why? Inventory is taken away by the owner, so inventory has gone out, so decrease in the assets, then inventory has to be credited, and the liability of owner drawings is increasing, then it has to be debited, receivable, debited. So here you will say inventory on 9th in inventory 5, and here you will say 9th drawings. Is 5,000. So double entry is completed. Okay, wait a minute. So the double entry for 9th is completed. The double entry for the 9th transaction is completed. Okay, now we move to 10th of March. Ranjan took 3,000 for personal use. He took 3,000 rupees. He has taken away cash 3,000. Then 10th, we will say Ranjan account 3,000. Here we will open a Ranjan account for Ranjan. Here we will say DR, here we will say CR, Ranjan account. We have to receive 3, so we are putting here 3. On which date? 10th. What you receive? Cash. Cash. Okay, so understood what has took place here. Ranjan, the owner's name is Ranjan. He has taken away cash from the entity, so cash has gone out, so cash is decreasing, so assets are decreasing. So cash account has to be credited. Okay. Then Ranjan account has to be debited because we had to receive cash from him. There will be a dual aspect. There is a dual aspect. Each and every transaction has two effects. One is this, one is this. Okay. And 11th. On 11th, the transaction says purchase returned by the business at 6,000 rupees. We have returned back the purchases. Inventory 6,000 rupees worth of inventories were returned back to the creditors. Creditors account will be debited. Creditors account will be debited with 6,000. Right, 6,000. And return outwards. You say here return outwards. DR and CR. Return TURN. Return outwards. Outwards. Right. Ranjan purchases returned by the business. Return outwards is debited by 6. That is when it happens. It is on 11th. 11th. This happens on 11th. This is straight creditors. This is return outwards. Return outwards. Okay. So double entry is completed. That is of course 11th. It took place on 11th. And 12th, paid employee salaries 40,000. Right. Here we will open a employee salaries account. Debit and credit. Salaries account. What happened on 12th? We have paid 40,000 and 40,000 salaries on 12th. Okay. Cash is going out 12th because here on 12th we have paid salaries 40,000. So cash is going out, so cash has to be credited. Then salaries is an expenses that has to be debited. Okay, here we will say cash. Here we will say salaries. Okay. 12th. 13th, sales were returned 6,000 by customers. Customers have returned 6,000 worth of goods to us. Then return inwards. Okay. Another account we will open. Return inwards. This is DR, CR, return inwards. Okay. return inwards. Return outwards will be creditor, right? 11th, trade creditors is 6,000. Okay, now 13th, the our customers have returned back 6,500 worth of goods. Okay, trade debt. So where debtors account will be creditor. 12th, return inwards 6.5. Okay, here we will say trade debtors. Understood? Because we have past journal entries in previous question answer. Okay, so you must be able to catch me, you must be able to travel with me. Okay, so here number 12, no sorry, number 13 says sales were returned, 6,500 worth of goods were returned by the trade debtors. So trade debtors sales, when we are making sales, the goods were gone. When the debtor returning back the goods are coming in. So sales return account debitor 6,500, and debtors amount is going to decrease, then it has to be creditor. Okay, like sales purchase return also like that. When we return the goods out, then inventory going to decrease, then we have to pass the credit entry for return outwards, right? And it should be debited to trade creditors, because creditors amount going to decrease. Okay, so for 14th of March, rent for the month is 20,000 was paid. 14th of March were paid rent. We will say rent account. Here DR, okay, rent. Debit 25,000, rent account is 25,000, cash on 14th, 14th, cash 25, because you know why this took place on 14th. The office rent we have paid for 25,000 during the period, so cash has gone out, so we have credited to cash, and rent is an expenses, we have debited to rent account. So this here we will say cash, here we will say rent. Adjustment number 15th of March, paid water bill through check. Paid water bill through check. Open a water bill account. Water charges. Debit. This is debit and this is credit. Water. Okay. We have paid through bank. then we have to open up a bank account. Somewhere here we will open bank account. Here I will open the bank account. Okay, this is DR and CR. This is bank account, right? So water says we have paid water through bank check, then 2200 on 15th, it takes on 15th of March. So credited to 2.2 on 15th water. Here we'll say bank. Okay, paid water bill through check 2,002.2 on 15th. Understood? Then 17th, because if you are paying through bank means bank is the asset, bank balance is decreasing, assets are decreasing, then it has to be credited. We have credited here. And water charges are expenses, it has to be debited, it has been debited. Okay, and now on 16th of March, Ranjan settled 4,000 worth of trade creditors from his personal cash. Okay, where is Ranjan? We have opened. This is we can say here drawings account. Okay, as I either drawing or Ranjan as a personal account. Okay, here this one, the 3,000 worth of inventory, 3,000 worth of cash taken by the Ranjan, that has to be mentioned under the drawings. Okay, as the drawing account. Here 10, adjustment number 10, drawings. Oh, both are same. Drawing account also you can charge. You can charge his personal account and deduct it from the equity. So that is not a must, but we have, it is the proper way to charge it at the drawings account. Okay, so settled 4,000 worth of trade creditors from his personal. So his drawings account, we have to pay him 4,000, right? This is on 16th. We have to pay him off on 16th. We have to pay him 4,000, and trade creditors are reduced by 6 by, is that on 16th. We'll say Ranjan. Ranjan has settled that. Okay, so double entries, because Ranjan is owner, he is separate from the business, right? Ranjan is the owner, he is separate from the business. So we have, even he settled that money, our creditors, we have to pay him off. That's what we are charging his account. We have to pay him. We are trading his, we have credited to his account. Okay, and trade creditors will reduce. Trade creditors will reduce. Reduce in the sense we have to debit that account. So we have debited. On 17th of March, machinery arrived. 500,000 worth of machinery arrived. Was purchased using a bank loan. I purchased machinery using a bank loan. Bank loan account. We had to open a bank loan account. $500,000, right? And machinery account, machinery 18th, no? It took place on 17th, right? Machinery's account will debited on 17th. Machinery account, bank loan 500,000. Okay, 17. Here we will say machinery. Okay, so it is completed because we have used the bank facility, the bank loan, to purchase the machinery. So here cash not involved. We have borrowed we have took a loan facility. Loan facility has been utilized to purchase a machinery for the entity. So bank account is credited and machinery is an asset. It is coming to the business, increasing the assets, so debited, and loan, bank loan is the liability, it is increasing, therefore it is credited. Okay, adjustment 17th March also completed. Now 18th March, paid bank loan installment of 24,000 with an interest of 5,000. We have paid an interest and bank loan, repaid the bank loan. Yes, we had to open a interest account, DRCR, interest paid. Interest paid and bank loan. We have in 24,000 installment paid, then bank account debit 24,000, 18th adjustment, right? Cash account credited 18th adjustment, loan installment, right? That is 24,000. Here we will say cash. Interest 5,000 paid off. Interest is an expense, so expenses account debit on 18th. Interest account is debited and cash account has been paid and cash is decreasing and cash account will be credited. 18th interest paid. How much? 5,000. Okay, here you would say cash. Okay, so 18th adjustments also completed because on 18th bank loan installment 25,000 paid, cash account is credited and bank loan is debited because bank loan will be reduced by that amount. right? And interest paid is cash account credit, and interest expenses, interest paid is debited because interest is an expense. Now 19th, paid bank charges. So bank charges, we have to open a bank charges account. Okay, debit and credit, bank charges. Bank charges is a expense. It has been debited by 5,000 on 19th, and cash account now on 19th should be credited with 5. Right? This is what bank charges. Bank charges. Five. Here you would say cash. Cash. Okay. So 19th adjustment also finished because bank charges is an expenses. So expenses always increase in expenses will be debited. So here we have debited with 5. We are paid by cash bank charges. So cash is reducing or decreasing. If the cash is decreasing, asset is decreasing, then cash account has to be credited. Okay. On 20th March, Rajan invested Ranjan invested 65,000 cash in the business. So he's investing business 65,000 into the business. So he's bringing back the cash into the business. So cash account debited and capital account will be credited. 65 20th cash. He brought cash into this. Here you will say capital. Okay. Now we have completed all the double entries. Now we have to balance the ledgers. Each ledger has to be balanced, right? And I need an calculator. Okay, then calculator. Wait for a minute. I will come back with the calculator. Okay. Yes. Here you say the greater side, you have to add it first, balance it first. Okay, this is the greater side, so I am balancing this side. Okay, here you say here you say 400,000 plus 25,000 plus 8,500 plus 65,000 498.5 498,500. Okay, other side is from 498.5 we have to deduct 100 minus 75,000 minus 6,000 minus 3,000 minus 40,000 minus 25,000 minus 24,000 minus 5 minus 5. 100, 75,000, 6,000, 3,000, 40,000, 25,000 and 24,000, 5,000, 5,000. Okay. So here balancing figure is 215,500. Okay. Balance carried down. Okay. Here you will say balance brought forward. Brought forward. Okay. Plus 100 plus 75 plus 6 plus 3 plus 40 plus 25 plus 24 plus 5 plus 5 498.5 called serenade. So here 498,500, 498,500. Here is brought forward is 415.5. Okay. So that has balanced. Then here we come to the capital account. 600,000 plus 550,000 plus 400,000 plus 65,000. 1,615,000. 1,615,000. 1,615,000 brought forward. 1,615,000. Okay. Other things we can manage without the calculator. Okay. So here, okay, here you will say machinery 1,050. Balance carried down 1,050. 1,050. Balance brought forward 1,050. So this is also equivalent 100. Here inventory, we will say inventory is 140. 140. Here its balance carried down 40,000 minus 5,000, 135. Balance brought forward. Okay. Trade creditors. Trade creditors 55. 55. 6 is 12. 18.5. Wait. 55 minus 6,500 minus 6,000 minus 6,000 means 36,500. 36.5 carried down brought forward 36.5. Okay, so other matters here, it is 55,000 carried down 55,000. Okay, here is 30,000. Here it is 30, 9, 15, 15 is carried down and brought forward is 15. Okay, here rent is 25, single entries that don't need to be balanced. Here is 500 bank loan. Here is 500 bank loan carried down 476, brought forward 476. Okay, all the others are single entries. You have to balance it. Okay, four 16. Where is the 16? Number 16. Trade creditors. Trade creditors. Where? Trade creditors. Trade creditors. Okay, 5, 4. Then here 4, here 1 carried down, brought forward this one 4,000, 4,000 and carried forward is 1. Okay, understood? Everything we have balanced. Here you have to do it, carry down. You have to write it down. Carry down 600, right? Balance it 600, 600, 600 and brought forward 600. Like this you had to balance it, right? Here everything 25, everything, because we don't have I don't have time to spend this, so this area you have to cover it. Okay, so straight away I can take balances from here, single entries now. So first, cash account. Okay, first is cash account is has a debit balance of 215,500. Okay, other one is capital account. We have 1,615.5, right? Okay, yes, sir. Next one is furniture. Furniture account is 600,000 debit balance. We had a debit balance. Machinery has a debit balance of 100,000 machinery. Equipments (1,050). Machinery is 1,050,000. Okay, 1,050,000. Okay, equipment 100,000. Okay, equipment 100,000. Then next is inventory. Inventory or purchases, we can say. Okay, inventory or purchase. Purchases. That has a balance of 135,000. Okay, 135,000. Trade creditors. $36,500 credit balance. 36,000. Sales. $55,000 credit balance. Wrote for. Trade debtors. Trade debtors is 15,000. Next one is rent. Rent. $25,000. 25,000. Drawings. Drawings belongs to 5. Drawings is debit balance. Okay, drawings is debit balance. And water charges. Water charges. Water charges 2,200 debit balance. And Ranjan account. Ranjan account is 5,000. No. Yes. Ranjan account is 1,000. 1,000 credit balance. 1,000 credit balance. Okay. You have to see whether it has a credit balance or debit balance. If you made a mistake, halas, finish. Okay. Other one is return outwards. Return outwards. Credit balance 6. And salaries. Salaries debit 40,000. And return inwards. Return inwards 6,500 debit. Okay. Bank loan. Bank loan 476 credit balance. Okay. Interest paid. $5,000. bank account has a credit balance of 2.2. Bank charges account debit 5. Okay, now we will see rebalancing. Here we have completed all the balancing activity, ledger balances. Okay, here cash account, the balancing figure is 215, right? Here 6.5 creditors, number 7 entry 6.5. Okay, when you are balancing, when you are posting double entry, both entry should be equal, right? If there's any difference, if you put 6,000 here and here 6,500, then the trial balance will not balance. Okay, here also Ranjan, number 16, Ranjan account 16, we have made 4,000 in account 4,000. Okay, it should be like that. Here 38,000, 38.5. Here we will say 215 cash account 215,000, capital account capital this is 250 cash. Okay, we have balance all the we have did the balancing for all the ledgers. When we are balancing, we have to see the greater amount, which side is greater, and greater amount, take the greater amount here and put it here, and take the balancing figure here, that should be the balance carried down, and here we are bringing to brought forward as a brought forward, right? Here cash account is 215, capital accounts is 615 credit balance capital account, and furniture accounts is a debit balance 600, machinery account is debit 600 1,050,000, and furniture account is 600, furniture account is 600, sorry furniture is 600. Okay, and machinery is 1,050,000, equipment is 100,000, inventory account 125,000, balancing figure 120,000, and trade inventory or purchases, you can say trade creditors 38,500, 38,500, sales 55,000 credit balance, 55,000 credit balance, trade debtors 15 debit balance, 15 debit balance trade debtors. Next is rent, debit balance 25, debit balance 25, drawings 5 debit balance, 5 debit balance, water charges to 2,200, 2,200 debit balance, Ranjan account 1,000, that is 1,000 credit balance, this is credit balance. Salaries account, yes, where's the salaries account? Salaries account 40,000 debit, 40,000 debit, and return outwards is 6 credit balance, that is 6 credit balance. Salaries account 40 debit balance, return inwards 6.5, bank loan 476 credit balance, 476 credit balance, interest paid debit balance 5,000, interest paid 5,000 balance, bank charges 5,000, bank account 2.2 credit balance, bank account 2.2 credit balance, bank charges 5,000, debit balance bank 1000, bank account 5000 debit balance. So we have to add it and see. We have to add it and see whether the trial balance is balancing. Okay, 215 plus 600 plus 1,050,000 and 100,000 is 125,000 plus 15,000 plus 25,000 plus 5,000 plus 2.2 plus 40 plus 6.5 plus 5 plus 5, 2,193,000, 2,193,000.7. Okay, here 1,615,000 plus 38,500 and 55,000 and 1,000 plus 6,000 plus 476,000 and 2,200, 192,193,000 and 700. Okay, so both are balanced. So if it is balancing, we are okay. If it is non-balancing, if it is not balancing, then you have to see there will be a posting error. If you post here one amount, if you say sales account is 25,000 in sixth, right, go to the sales account 25,000. If you put here 20,000 and here if you put 25,000, then definitely trial balance will go wrong. There will be differences of 5,000 like that. Okay, and if you make a casting difference, if you when you are casting the account, if you make a mistake in addition or casting, then that also will reflect in trial balance. Understand? So and if you put double entry, when you are making the double entry, one is debit, one is credit. If you put both double entries to the one entry, if we say debit entries, then also the trial balance will not balance. If you put both double entry in credit also, then also the trial balance will not balance. Those are the reason why the trial balance not balance. Okay, so now you would have got a good idea of preparing trial balance, ledger accounts and trial balance. Okay, do more exercises. When you do more exercises, then you will be more familiar with this debit and credits. First, when you are practicing, you have to do it the accounts in T accounts, right? Once you are okay, then we will go for the vertical format accounts. Okay, thank you. So today we are concluding this lectures now. Okay, thank you, bye.